All right, just want to start by saying this is not investment advice, so do your own due diligence. I could be completely wrong about this, but this is my thoughts and this is what I see. So I look at the Nasdaq, and this to me looks like a distribution pattern. And I look at Bitcoin at the top, and it has an eerily similar pattern. And I've talked about this in another video, but I'm making a video specifically for this if you want to dive a little bit deeper. But this pattern is eerily similar to the pattern seen on QQQ, the Nasdaq, where it's testing this top resistance line for the third time now on Nasdaq. And just look at it. It's eerily similar. So I'm looking at that, and that looks like a distribution pattern to me. And then I look at SPY, and this looks like a distribution pattern to me because it's just been grinding higher, not even really going higher, not going anywhere for months. And every day it's opening high and selling off. They're gapping it up, sell off, gap up, sell off, gap up, sell off, gap up, sell off, gap up, sell off. Almost every day they're doing that. And this is interesting as well. Check this one out. Tesla. Look at Tesla's pattern at the top. It looks eerily similar to SPY's. It was just grinding sideways, broke out, pulled back, kind of double bottom. But it didn't set a new high on Tesla over here, whereas it did, we did on SPY over here. But it has a little bit of a similar pattern. If you compare them side by side, they look very similar. So it looks like distribution to me. But you can't base something just off of that. But then I go, and a big short investor, Michael Burry, is back on Twitter and warning of the biggest market bubble in history. Flying pigs 360. And you know the saying, bulls make money, bears make money, pigs get slaughtered. And that's why I use that quote, flying pigs 360, because he's saying how greedy people are getting. And I can't blame them. And here's the thing. Other than just the charts, where it looks like distribution pattern to me, we're gapping up every morning and then selling off. Crypto's already sold off. Bitcoin had this really ugly pattern up here, and it looks eerily similar to QQQ's pattern. Okay. The market is overextended on multiple time frames. Look at SPY, overbought on the weekly, overbought on the monthly. Usually when it's overbought on the monthly, it has at least some sort of pullback. Look, overbought, pull back, overbought, pull back. It can get overbought for a while, though. Look at it here during the dot-com bubble. Okay. But I don't know. It is overbought right now. So based on the charts, I think we're overextended. And if you look at the market, we've been in a bull market for the last, 12 years? Just steady. Other than the coronavirus crash, which is a quick dump. I wouldn't even consider that a bear market. It was just way too short. And it's like everybody's getting in now. Everybody's got a stock account now. Everybody's investing in crypto. Everybody's getting margin. Everybody's using leverage. Everybody's getting in the market. Even your grandmother's doing stocks now. I mean, every Tom, Dick, and Harry is a professional stock picker now. They got all the hot tips, Dogecoin to the moon. And it's like everyone's getting in the market. The market seems overextended. We have a distribution pattern. Interest rates appear to be potentially on the rise. They've gone up. The bond yields have gone up in the last 6 months or so. Okay, they've cooled off recently, but we had a bit of a spike today. I got a little bug flying around over here. We had a bit of a spike today on the bond yields. U.S. dollar went up, and the U.S. dollar usually goes up when the markets drop. There's a bit of an inverse correlation because money is leaving the markets and going into the dollar. And one of the only things that was real green today, and there was some stocks that were green, okay, but the US dollar was green, and that's because a lot of money was leaving gold, money was leaving crypto, money was leaving the markets, and that all goes into the dollar and pushes the dollar up. So are we going to crash? I'm not going to say we're going to crash, but I will say this pattern is definitely concerning. And so what I would look for is a potential test of this bottom support area. And if this breaks, then I would say I would be looking for a large dump and a potentially multi-year bear market. Because If you look at the market based on Warren Buffett's indicator, the Wilshire 5000 to GDP, the market is the most overvalued in history based on that indicator. If you look at the PE ratios of the indexes, the market is quite a bit overvalued. If you look at so many traditional fundamental metrics, the market's quite a bit overvalued. So you have overvaluation combined with significant amounts of leverage, and you've already seen that company, that fund, they went bust because they had too much leverage and they got liquidated. And that could just be the first sign. That could be like the Lehman Brothers sign that things are starting to turn. So you have this brutal pattern up here, overvaluation in the markets. Inflation is going way up, and that's really the needle to the balloon. Okay, because if we have a bubble, bubbles can go on a really long time. They say the market can stay irrational longer than you can stay solvent. Bubbles can go on for a really long time. But inflation is the kicker. We haven't had much inflation for the past 12 years. And the question is this just temporary inflation? Or is this more an ongoing thing and it's going to get worse? And that's really the question over here when it comes to inflation. But if inflation does continue to tick up, that really is the pin that's going to pop this bubble. Because this bubble can probably go a lot longer so long as interest rates are able to stay low. But if inflation goes up and interest rates go up, and because they go hand in hand, if inflation goes up, interest rates have to go up to compensate. Otherwise, we're going to get hyperinflation and everything is going to be super expensive for all of us. So that's really the kicker here. Now, the Fed raised expectations for inflation today, which is why the market and everything else sold off today near the end of the day. Question is, will inflation continue to tick up? And if it does, then I would say it's almost a certainty that things are going to drop a lot, everything. Because the reason why this has gone on for so long is because of very low interest rates and very low inflation. Now, if you get rising inflation and rising interest rates, above all else, that's what's going to pop this bubble. Can it continue? I don't know. But this pattern does not look pretty to me. I'll just say that. And it's like the Bitcoin one right up there. Very similar. And what's also interesting, you see this big pullback on Bitcoin over here? Even Nasdaq had a big pullback right before it made this pattern up here. Big pullback. Defied it, went higher, made this rising wedge pattern. Bearish head and shoulders, dumped Bitcoin. Big pullback, rise up, made this rising wedge pattern. Can we pass this resistance area? That's the question. If it passes this trend line, this resistance line, and holds it as a support, that would negate my theory. Unless that happens, I'm bearish on the market right now. That's my thoughts. What do you think? Tell me in the comments. I know nobody wants to hear, is the market coming down? This, that. Am I a naysayer? I don't know. Who knows for sure? At the end of the day, the stock market's always going to crash at some point in time. It's just a matter of when. It always has a crash. It will always go back up and higher in the long term, but sometimes it takes a long time. In the Great Depression, it took around 25 years to recover from the peak of, I think, 1929. It took till around 1954 for the market to fully recover and hit the highs that it hit in 1929. So keep that in mind. The market does always go up in the long term, but sometimes takes a very long time to recover. And let's also take one more note here before I go. Japan, 30 years later, has still not recovered from the bubble that popped in 1990. There was a big bubble in Japanese equities between 1970, where it ran all the way to 1990. Huge bubble. Big crash, took almost all of it back. Was 13-year bear market before things started turning. And still to this day, over 30 years later, we still have not recovered on the Nikkei 225. That's notable. Something to keep in mind. Does the stock market always go up? Yes. I'm sure now a lot of stocks pay dividends, so probably Whoever did buy up here, if they held, they would have made their money back just because of the dividends. They would have made it back maybe 5-10 years ago already. But still, long recovery. Can it happen to U.S. equities? Anything's possible. Who knows for sure? All I'm going to say, this pattern does not look pretty. And combine that with massive debt loads, rising inflation, potentially rising interest rates, rising bond yields. Michael Burry giving a dire warning, biggest stock market bubble, biggest bubble in history. Everything's inflated. Assets like Dogecoin, it hit 100 billion for Dogecoin. I mean, it's a crazy market that we're living in 2021, to say the least. You have assets that should be worth pennies. Really, they're being worth $55 for AMC when this is in reality maybe a $1 stock. And perhaps one day they'll go bankrupt. But yeah, take that look in the AMC. Threw that out. Big breakout. Anyways, thanks for watching. Subscribe, like, comment, share. Check out my other videos. And check out my stock market course. I teach you everything about the market. I'll show you right here. And advanced technical analysis strategies and so much more. The link's in the bio. If you want to learn how to trade, if you want to learn how to read charts, but not just that. I teach you strategies. I give you basics about short selling and options and financial reports and fundamentals and ETFs, accounts and tax basics for Canadians, that one. But the course is for everybody, Canadians, Americans, cryptocurrencies. You can use a lot of these strategies. There's just a few bonuses for Canadians, as I'm Canadian. And I teach you so much more in here. There's a lot of value. I'm still adding to it. So if you want to learn more and dig deeper, check out the course. Links in the bio. Thanks for watching. Have a good night, guys.